because I don't want to increase my premium because that increases my commitment, and it also takes a bigger bite out of the first year cash value. Here's what you can do. In today's video, we are going to talk about how to get the most cash value in a whole life insurance policy. This is one of my favorite topics when it comes to whole life insurance because it's a topic that people are always interested in, particularly those who are taking out whole life insurance policies and want as much cash value as possible. So whether you have a whole life insurance policy already, or if you're considering one, perhaps you're speaking with an agent right now, we're going to go over some of the most important terms to be aware of. So when you are taking your whole life insurance policy out, or you're about to send the check in to start that policy, you'll know what to look for, and really you'll know if the policy is set up to have high cash value from start to finish, or if it could be improved. So let's get on into it and have some fun. So when it comes to a cash value life insurance policy, knowing the rules of the game or the limits are very important. So one of the core benefits to cash value life insurance is the fact that if we do everything properly, we can access that cash value tax-free. That has always been a point of attraction and always will be, provided the IRS does not change the rules on cash value life insurance. But with that said, there is a rule in place right now that can mess a policy up and take away a lot of the tax benefits, specifically with respect to the cash value. And that is the modified endowment contract. So if a life insurance policy becomes classified as a modified endowment contract, the short version of this is a MEC, what happens is that your cash value grows tax deferred, but if you ever want to access the cash value, what happens is you have to pay ordinary income tax on the gains, and then you also have to pay a potential 10% penalty tax if you access it prior to the age of 59 and a half. That's if your policy becomes a modified endowment contract. So we want to prevent that from happening. So then we have the MEC limit. Know the limits, the rules of the game. A MEC limit is exactly what it sounds like. It's a limit that determines the maximum dollar amount you can pay into a policy before that policy becomes a MEC. Here's a fun part of the game. We can actually set that MEC limit wherever we want. How we determine the MEC limit is when we initially design a policy, and how it's done is with a total death benefit. There's a bit more to it. An individual's age, gender is a factor. The guaranteed rate on a life insurance product will also impact the MEC limit, but the biggest determining factor is an individual's age and total amount of life insurance on that policy. So often what we'll do, if someone's goal is maximizing the cash value, is see how much we're looking to pay into the policy and then design the policy with the minimum amount of life insurance in order to attain the desired MEC limit. For example, if you said, hey, I want the ability to pay up to $100,000 per year, note I said up to $100,000 per year, not commit to $100,000 per year, what we would do is see how much life insurance do we need. Perhaps it's $2 million. This number will always range depending on your age. Let's say it's $2 million in your particular case, and that gives you a MEC limit of, guess what? $100,000. Now we have solved for the minimum death benefit possible in order to be able to pay up to $100,000 per year and still have access to your cash value without it being a MEC, which is what most people want. Now there's a bit more to it. So let's continue on here, and we'll use this example of the $100,000 MEC limit. We'll assume we need that $2 million death benefit to attain a MEC limit of $100,000. Okay. So there's a couple pieces with a whole life insurance policy. What we will always have is this, our base premium. This purchases a whole life death benefit. So for example, if you said, okay, I want a $100,000 MEC limit, so I'm just going to go out and buy a $2 million death benefit because $2 million for me at my age gives me $100,000 in MEC space, a MEC limit that is. Well, that would cost you, let's say $60,000 per year. And when you look at base premium dollars, when you pay that base premium, what it gets you is, in this example, $2 million death benefit. But what it does not give you is cash value in the first year. In most cases, it does depend on the product, but let's assume it's a traditional whole life insurance product, the most commonly sold product. What that will result in is in the first year, $0 in cash value, or very close to zero. So that's a very expensive life insurance policy. Many people view it that way. So stopping there, is this something you want? Most people say no here. And I'll say this is not how to maximize cash value. So the base premium is required, but here's what you can do. So if I wanted to pay in $100,000 per year, what I would do here is this. I would set that premium as low as I could. This also has to do with limits, which we're going to tie this together. But we're going to set it at $10,000. Now, if we stop there, we just say, okay, give me a $10,000 premium here. How much death benefit does this give me? It won't give you $2 million, I'll tell you that much. It might give you $400,000, which will not give you a $100,000 MEC limit. Lower death benefit equals lower MEC limit. This might only give you $20,000 MEC limit. See what's happening? As we reduce the death benefit, we reduce the MEC limit. What we want is that $100,000 MEC limit, so the IRS will allow us to add more money into the policy. Now, that's an important piece I just mentioned, add more money into the policy. Because here, if we add more money into premium, it's not that attractive. Because again, it doesn't show up in cash value in the first year, sometimes the second year. Eventually, those premium dollars do come back to work for you. You will see them build equity. You'll have cash value you can access, but in the beginning, it's not there. So here's what I would do. Firstly, let me hit something here. When I say add more money, what I am referring to is what you see in blue, this PUA rider. PUA stands for paid up additions. So what this does is accelerate the cash value growth of a whole life insurance policy. So if you were to pay in $10,000 toward your PUA rider, with respect to cash value, guess what you'll see? In the first year, you're going to see somewhere between 90 to 95% of that. This again depends on the company and product. But what that means is you've paid in $10,000 and you see somewhere between $9,000 and $9,500 in immediate cash value that does accelerate the long-term growth as well. So, hope that made sense. A follow-up question we often receive here. Remember, my father asked me this in my very early days in the life insurance industry. His question was, well, can I just put nothing here because I don't care about the death benefit and put everything into the PUA rider? My answer was no, Dad, you can't do that. And at the time, I didn't know the reason why. I just knew that it wasn't possible. There's two reasons why. One goes back to that MEC limit. If you don't have anything going toward premium, we will trigger a MEC. But then second, there's insurance company limits as well. Because often a question we receive is, well, how much, Steve, how much can I add to the PUA rider? Or another way to put it, what's the limit? The limit depends on the insurance company that you're working with. All companies have different limits. You'll see some of the top companies. When I say top companies, I mean some of your major mutual life insurance carriers will allow us to drive that premium 10%. Some are lower than that, and some are a little bit higher. Again, all companies have different limits on this. We've got some videos that go into specific detail on that. But 10% of what? 10% of the maximum you ever want to pay into the policy. So here we go. 100K per year is your max. This is what we want to do. 10% base premium, 90% PUA. Now all of a sudden, you've got a max cash value policy. Would there be an issue with this from anything that we've gone over in this training so far? There would be. If you just go with that $10,000 base premium, how much life insurance did that get you? Do you remember what the number that it gave you earlier? I erased it. Let me draw it again. $400,000 in this generic example. Do you remember the MEC limit that was generated from that $400,000 death benefit? It wasn't $100,000. It was $20,000. So what that means is if you have that $400,000 death benefit and you pay another $90,000 into your PUA rider, you've now triggered a modified endowment contract. You've gone over the MEC limit. Not good. So how do we get that $100,000 MEC limit is the question. Because I don't want to increase my premium because that increases my commitment and it also takes a bigger bite out of the first year cash value. Here's what you can do. This guy, term insurance rider. This is a cheap method. If you don't like the word cheap, you could use the word cost-effective. A cost-effective method to add more life insurance to the policy without increasing your premium. So now what we can do here is, let's say for another $1,000, sometimes it'll be much less than this, it depends on my age, but another $1,000, that buys me $1.6 million. That's added to the $400,000. So now my net death benefit is $2 million. So if I die, $2 million net is paid out. What does that do for my MEC limit though? Well, now gets me back to the number I want, the $100,000 figure. So effectively what we've done now is added a term insurance rider to bring our minimum commitment to $11,000 per year. And then my PUA rider, just to use round numbers in this example, $89K per year. Can also set this up to be very, very flexible where you don't have to add it. Tell you what, that's a lot of people's favorite thing to do. Or I should say, a lot of people appreciate that, having a policy where I can commit to this and add more discretion. My life insurance death benefits there in the event anything happens, but additional payments are immediately accelerating my cash value growth. A lot of attraction lies in that area. But it's a nice way to design a policy to maximize the cash value. Upfront, guaranteed, you'll see a lot of value there. So I hope you enjoyed this training session, this video. We've got a couple other videos that do provide more information, more of a detailed breakdown along with illustrations and such. This was meant to be just a fun whiteboard overview, but let us know your thoughts. Let us know if it was helpful, if you have any questions at all. And as always, I hope this helps. Thanks so much. Hey guys, Steve Parisi here. If you enjoyed the content you just saw, please subscribe, like, and hit the notification bell for future videos. If you'd like more information or to see some custom policies for yourself, feel free to call or email our offices at the contact information below.